Good morning. I hope you guys doing well and welcome to today's edition of the London Session Open. Today is April 8th, 2020 and it's 9:37 a.m. in London when we're looking at the markets. We're going to see what's going on and see if there's anything interesting happening. I did see stock markets come down to some interesting levels, had a bit of a bounce. Currency markets pound up a bit, otherwise a bit quiet, I think. Crude oil market, big slide yesterday. So we're going to talk about that. But before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk. And what should you listen to me then? Well, I've been trading since 2006, and I tried many different ways of trading the markets. Struggled for quite a few years, and finally, about 6 years ago, so I found something that really worked for me, and part of that is shown here as I analyze the markets. And hopefully I can help you, but it's much more short-term in nature than I used many different strategies, by the way. But hopefully you can use some of this information in your own trading. Okay, let's begin. And let's actually just take a look quickly at the cases as we usually do every morning. And if you want to say hello, by the way, you can just put it in the chat box, which is to your right over here. So you're most welcome to do that. Just have Julie. Good morning to you. Thanks so much for joining us. If you're watching the recording, guys, don't forget to leave a little comment as well during the video. That's really important. Just a simple hello or a simple thank you. That's good because then YouTube is going to see, all right, people commenting on the video, people are liking the video, and then its little algorithm is going to help to spread the word about the video. And it's a free one, of course, so this is a great way of just helping out and saying thank you. We have Marvin as well in the chat box. Good morning to you. Hope you're doing good. All right, so let's take a look at some of the data. So the number one thing I've been using lately is the coronavirus data, because we saw the same pattern in 2003, the same pattern in January, February in the Chinese stock markets. So in Italy, the number is at 2.3% for yesterday. So it had a very low increase of number of cases, some 3,000 cases, which of course is a lot. But if you compare that with the number they had before, is small, and it's this momentum that is slowing. And in places like, for example, like Norway, they had a higher rate like this, but they have of course far fewer deaths. So you have places like Norway, Austria, Czech Republic, and Denmark that are looking to start to open up their economies, with Austria pretty much allowing shops to open, and probably on the 14th of April, smaller shops are going to be allowed to open, and then I think about a week later, so you're going to have bigger shopping malls and hairdressers allowed to be open, and I think in the 1st of June or so, even more things, sorry, 1st of May, I think it is, and then it just goes gradually. And I think hotels and restaurants, I think it was mid-May or 1st of June or something like that. So things are going in the right direction. So Italy doing good. France has a bit of a pickup in numbers. Back to double digits, not very good. And let's see if this trend continues. I don't think so though. I think in the past, just before the lockdown, they had some high numbers. Now they don't have that as much anymore. So I think it's more of a fluke. I hope so at least. UK doing very good job. So UK is down at 7%. That's a solid number. And now, as well as I said yesterday, with the Prime Minister Boris Johnson being sick in intensive care, then most likely people will heed the warnings even further. And I think over the next 2 weeks or so, we'll see some solid declines here. I think maybe in 1 or 2 weeks from now. And as well, the Queen was speaking on Sunday as well. And you've seen some support and rallying around that as well. So you're definitely starting to see some changes. Because if the PM can get it, then anybody can get it, I guess. And then this is the US, and US as well, some decent numbers. They've been at 8, 9, and 9%. Let's actually see if we can, I just want to see more granular. Yeah, so 8.1, 9, and 9.1. You have Spain, solid number as well. Look at Spain just a few weeks ago, 8,000 on the 26th of March, 8,500 cases, then 7,800. Now we're down at 5,026. That's not a bad number. It's definitely a bit higher than we saw yesterday, but on a percentage basis, it's still a solid low number. You have Germany, which had a record low number of 3.2. Number of cases is 3,000. I think if this continues, I think both Germany and Italy soon is going to talk about how to reopen their economies. Then you have Sweden, which is not enforcing anything, just telling people to stay home. They are also seeing some decent numbers, 7%. Overall, the number of new cases for my index is at 6%, which is good. Just a few weeks ago, it was even much higher. And as I said to you before, when the growth rate was at its highest in my all country index here around 35%. In the beginning, of course, you need to ignore things when things just pick up, but after a while, when we reach these levels, that's when we hit the low in the DAX, and a few days later, on March 22nd, March 23rd, we find the low in the Dow Jones. Now let's take a look at something here. We're going to begin with the DAX. So this is the DAX, and I actually pushed up the buy spot a little bit today because I think we missed the buy entry with just a tiny bit, if I remember correctly. And so I pushed it up, so the new buy spot is at 10,187. So I think from here, the market is going to be quite interested to buy, and they're going to be interested to buy from here all the way down here. Now this is a little bit fragile, and it's impossible to know. If we have changed to low volatility environment, which you may have done, then this could potentially be it. You have yourself a 3.7% decline, and that's it. And then we slowly move upwards. I don't know for sure, but probably it has been. So for now, I'm going to be bullish from the spot with the trend following level here, and then we'll see what happens. There's definitely a bit of a risk here to this market, and the risk is the following. Like, if you see here, the price in the past here was creating a sideways pattern like that, right? If this market goes down and up and down and up and sort of creates another sideways pattern, then it's question forward. We could either break the upside and just do like that, or we can break the downside and do something like that, and then we'll see if this low holds. So that's the tricky part, but that's why I have my stop loss down here right now, and hopefully that's going to be sort of sufficient. And so the market might go down and do like that. But what I want to try and tell you is that if we build a base here over several days, then that could be a problem eventually. S&P, let's see, so we touched the buy zone. I mean, if you would go on a 30-minute, you might even argue that this is a small head and shoulders with a head and left and a right shoulder. And if we take out the neckline, we can potentially go lower. So this is the tricky part with this market, where you can have a situation where the market can actually tumble if we trade much lower. But for now, I wouldn't definitely not treat this like an inverse head and shoulders. So I wouldn't really go for that. If anything, see it this is probably some upward channel. We can go down a bit, but I'm sure about 25.33 was going to be bullish. If you want to hold on for this for a few months, then just working with 24,300, 24.30 is probably better. But I think we're in some sort of an uptrend now. And then that's the end of it. Sometimes you can draw some of these pitchforks. Yeah, so this pitchfork tells us effectively, look to buy down here somewhere, which is pretty much where I have my stop loss. But I think again, if we wait for that strong correction, I'm not sure we're going to get it. And that's why I'm already bullish on these levels. Because the volatility changes I've been showing you for the last 2 days. On the way down, very, very volatile. But when the market sort of realizes that, hey, we're going to trade upwards, the days become really, really narrow. And the daily change at that point is like, this is like 1.8%. This is like 1.27%. So it goes really narrow, but it goes upwards. Now everything is not great. If you look at this candle, this is a bearish candle, reversal candle. So some people are watching this right now and they're saying, all right, I want to sell. And it's definitely an indication here that you're seeing profit taking. And if you're really, really bearish, you think, Alex, I respect your view, whatever, but right now I think we're going to have some bad data and everybody's just going to be scared, or we're in that recession, then this is your opportunity. We moved up a bit of the yesterday's candle. We'll go a little bit higher, but do not take out that. Then that could be a bearish plan. However, I don't necessarily base trading just on a single candlestick. If you want to wait for my approval to sell, right now is probably when we take out 22,430. That's really what I will be focusing on. Let's move along. This is gold. So gold is in a short-term uptrend. Of course, we're sort of so close to the highs. Looking at this today, I'm not really sure what we're doing, but it does look a bit like head and shoulders, with a bit of a head and a left and a right shoulder. But maybe we shouldn't. We should definitely not do this line here. I don't agree with that one. What is quite clear though is that when and if we take out this high, we're probably going to continue to trade upwards. And that high is 1705. But for now though, people sold here on March 6th. They sold here on February 24th. So you need to be careful with that. In the very short term, we are creating a higher and higher lows. You have 1604, which is support, and if we go down to something like 1632, I think we can probably go upwards. Here are crude oil prices. The crude oil prices had a defeating blow yesterday. So we're dealing with what it looks like for now, at least. Market trying to curve out some sort of a range here between this level and worst case down here. I say worst case down here because if that happens, if we take out this level, we're probably going to go down, and that would of course get us stopped out. If one did buy yesterday here, there's not too much to do. We're just going to hold on to this one. On the other hand, if you didn't buy and you want to give this a little shout, then we are in the buy zone now. We might go a little bit lower, but as long as it's straight above this level here, I'm going to be bullish. There's obviously a bit of a challenge with this, and it's always like this. So always when the price goes really close to my stop level, I get like a really good risk-reward ratio. So we can potentially make 4 times the money here. But the problem with this setup is the fact that the higher the risk-reward ratio become, the less likely is it that we're actually going to reach target. All right, here's the euro, and I pushed up the buy area a bit today because we missed that out, this buy area. I had it lower. So if we go down to 108.34, then this is going to be bullish. And I'm going to be bullish from this spot all the way down. Big picture though is a bit challenging. I wouldn't get too excited. Like if we look at it like this, we're not going anywhere fast. We just move down a lot and up a lot and down a lot. If we sort of try to puzzle things together, the economic data of course is going to be bad, but the infections are dropping, so maybe that as soon as that stops and we start to open up the economies, we're going to get some decent numbers back again. And as I explained before, like at least in many parts of Europe, probably it's the same thing in the whole world, right? Imagine you run a restaurant. You're not going to have any business for 3 months. So you do what you need to do. And, you tell your staff, hey guys, it's going to be really, really difficult here to help you, whatever, or to have the business open. We need to close, otherwise we're going to go bankrupt, right? And maybe they get depending on where you are. So places like Sweden, for example, my sister used to work in a hotel, and they got 6 months of pay. But in other parts of the world, maybe it's 1 week or 2 weeks, or in some places nothing, right? But in Sweden, in all these different places, as soon as things improve in 2 months and 3 months from now, these people are gonna get their jobs back most likely. Because if you ever hired anyone, it's difficult to find someone good. So if they did a good job, they're probably gonna get their jobs back. And I do think 50-60% of all the losses we had in jobs are probably gonna be recuperated quite quickly. It's the last 20-35%, whatever, that is more difficult. But then these were companies that from the beginning were struggling anyway, so they would have maybe gone bust anyway at one point. It's just that it all happened at once. Now in the meantime, in the US, you're getting some money, and I think also even here in the UK, you get 80% of your salary. So you'll get that, I don't know, 1 month, 2 months maybe. So you'll pass that hump. If you have a mortgage, there's mortgage holiday for at least 3 months as well. You don't have to pay anything. So this is the hump. And then eventually people will go out there. That's what I think. And what's also quite interesting, if you look here, so the most sort of best indication, I guess, what's happening with the US economy right now is the initial jobless claims, because these figures are published every week. So we had some shocking numbers. On March 13th, we had 282,000 people losing their jobs, which is the biggie in the bigger context. But this is the one. And for the week of March 20th, we had 3.2 million. Now remember, what happened on March 20th? What happened on that week? Well, on March 19th, they shut down the US. New York. California. March 19th. On March 22nd, you had a shutdown in New York. Of course, numbers probably were bad already from the beginning, so a lot of people saw this. And it's very likely, because the shutdown is ongoing now, that we might have even another sort of very bad number. So the number for March 27th, which is the week after the shutdown, we had 6.6 million people being unemployed. Maybe we'll have a higher number now. And then, because I think now realistically, 2 weeks, I think anyone that wants to sort of shut down would be able to do that, I would guess. But what is quite interesting is that this time around, so 1 day and 3 hours and 36 minutes from now, when they release the next report, the consensus is for 5.2 million. So the consensus has moved up. Before, the consensus was really low, and you had, from a consensus perspective, really bad numbers. But now the economists have picked this up. So if you have another 5.2, like if you have a 4 million loss, then the numbers are better than expected. In the world of funny financial markets, maybe we'll have stock markets declining that day because every other time they actually gained. But what's interesting is that if it is maybe 4 million, you might still see stock markets gaining. So what needs to happen now, you need to have another 10 million people losing their jobs potentially for the market to sell off. Long story short, I think the market's looking ahead, and I think here what happening here is that we can probably see this go a little bit upwards. Okay. What else here? This is the GBP USD. So can you please I'm zooming in here. The idea was just to be bullish from 122.31, and that's it really. So bullish from here, and then probably upwards. We're up a bit, and then you have dollar yen, which I don't really have a strong opinion on. So we'll just leave this alone because it's more difficult. I think that the Euro USD, I understand. Data improves, Euro USD goes up a bit. Very straightforward. Euro data improves here, probably gonna go up a bit, but maybe the effect on a lower dollar might actually cause us to go down. So I think it's a bit like no one really knows. If someone did know, then the pattern wouldn't look like this. Okay, let's see if you guys have any questions. And see if we can help you anyway. Because we don't have a question here, which I understand, because lately what's happening is that I don't really have too much time. But we're gonna wrap things up, and I'm gonna be back tomorrow about the same time. Hopefully we'll have more time at that point. Don't forget to reach out to me via Twitter if you have any questions. I'm on AlexFX00. That's my handle. And as well, we have this course, the Investing Cube Premium Forex Training course. It's quite straightforward. It's technically not free. You can buy it for 799 pounds, or you can get it for zero cost with ATFX. The only thing you need to have is to have a real account with them. And that's it. So if you want to learn more about that, And that's 4 hours of content that I produced. Then you can check out that link. Have a great day, guys. And I'll see you guys tomorrow. Thank you, and bye-bye.